everyone. Happy Sunday. This is Simon with AvaTrade, and we're starting our weekly webinar. As you could see, the name of the webinar changed, but the things are remaining the same. It's the same thing. So, trading prospects, mapping out your week ahead. Fancy name. Okay. A few things about myself. This is me, Simon Friedman. I'm one of the senior account managers at AvaTrade. I started to trade over 23 years ago. I started as a prop trader back in New York. After 11 years of intense day trading, I moved into a less stressful environment and also started to mentor and educate others. And currently, I'm very happy that I have an opportunity to assist our customers. The agenda of the webinar, we talk about indices, stocks, commodities, FX, and we talk a little bit about the general situation, the fundamentals, what's important, what's coming up. We discuss economic calendar and other things. Risk warning, you can find a full statement at avatrade.com. And what we do here, it's purely educational, of course. These are the channels highly recommend for you to connect to. You have Telegram, Twitter, and my favorite, as I always say, a YouTube channel. You can find a lot of information there, tutorials, educational material. Also, all the webinars that are posted there. So if you missed a webinar or you can't make, don't worry, you can always get to the YouTube and find that webinar and watch it at your convenient time. And if you are watching it on YouTube, please put likes if you do like it, share with other people if you think it's beneficial, and definitely subscribe and click on that bell so you'll be notified when new things are coming in. So let's start with big picture. My sarcasm sometimes comes out, and all I want to do is just say, okay, let's just finish it in 5 minutes, because unfortunately the market is depending a lot on negative things, and one of the most negative things as of now is the war in the Middle East. So if I were to do it in a minute, I would just say markets are selling, a lot of downside pressure. Gold is super sensitive to the situation when things are getting super hot, like we had on Friday with the extension of the ground operation in Gaza. Gold start moving higher. So you can just say, sell equities and buy gold, and we would be done here, but things are not so simple. So let's discuss a few things. So we had something that a lot of analysts are writing, Red October. We're almost finished with the month, and it's really Red October, and things are selling. And as I mentioned to you last week, or I mentioned in my other webinar, I don't remember, there was October 19th was 36-year anniversary since the Black Monday of 1987. I think I mentioned to my team when I did the daily reviews. So the market is really selling. A lot of panic there. We still didn't see a flash. In my career, I've seen things of 2000, 2008, when market, before it actually bottoms down, it has to do something they call the flash out. The panic is selling, the market just collapses, and then slowly we find the bottom and start building the base for the reversal. It hasn't happened yet. So in the big picture, we still probably, again, nothing's for sure, probably will be seeing that in the near future, or maybe not. So again, some analysts calling it Red October. Things are really selling. Just to give you a few numbers, on Friday, the S&P fell 0.5%, and it actually in the area of 10% below the recent high of this year. So Nasdaq went down as well, 2.6% for the week. And Dow Jones, I think, is the weakest. We're going to take a look at the charts. I don't want to confuse myself and you. We're going to take a look. But it looks like Dow Jones gave away all the gains for this year. We'll take a look at the charts at the moment. So clearly, there's downside pressure. The banks are selling, and I just want to show you this screenshot that I took. There's a negotiation that keeps on going between the United Auto Workers and the three major automakers, and it looks like there was an agreement reached with Stellantis, which is a Chrysler, I believe, or parent of the Chrysler company, and Ford. And surprisingly, like it says here, this is the article from Market Watch, and it says right here that UAW workers are now on strike at GM's Spring Hill, Tennessee plant that makes the Cadillac models here. And it gives you the numbers here. About 3,900 people work at the plant now, but not all are the UAW employees. The expansion brings the number of striking GM workers to about 18,000, or roughly 40% of the total UAW workforce at the automaker. So we'll take a look at the GM later when we get to the stocks. But it looks like out of 3, 2 settled, certain conditions changed, and GM is still going on. So this is big, and as we mentioned a few weeks back, that this will be hitting U.S. economy strongly as well. Okay, so let's also go into the economic calendar quickly, and a few words about it for new people especially. I take out here the high impact events only, because those are the most important. And you can filter, you can choose whatever works for you. And again, it's important, in my opinion, to know the certain things are happening ahead of time. So you be prepared, or either you enter the trades or avoid the trades, whatever your strategy and the style of trading is. So let's go through it really quick. Monday, retail sales from Australia, GDP numbers from Germany, and Bank of Canada governor speaking. That's on Monday. Tuesday is a busy day, as you could see here. We have from China PMI numbers, and we have another chance of Bank of Japan of doing something. It's my kind of a wishful thinking or anticipation. As I always say, Bank of Japan likes to do things unexpectedly, so we could see things. As of now, we're still in negative area. Just to remind, especially to new people, all the major banks had extended their increase in interest rates in the past year and beyond, and Bank of Japan is still sitting at the same rate, minus 0.1%. So that's another day of decision for Bank of Japan, and that's on Tuesday. We have retail sales from Germany, and we have CPI numbers from European Union here, and employment data from New Zealand. That's on Tuesday. As you could see, today it took 2 pages for me in the high impact events, so it's a very eventful week. We have another PMI from China. We have ADP employment change from US. Looks like this is important here. Chairman of Swiss National Bank is speaking, and we have interest rate decision. This is, I think, the highlight of the week, just for us to remember. As of now, what's priced in is no change, as you could see here as well. We are at 5.5%, and consensus stays the same. And most important thing is that 30 minutes after the decision and the statement, we have the press conference of Jerome Powell, when everybody is really drilling him and paying attention to his reaction and his words and his mood, I guess, as well. We have another speech of Governor of Bank of Canada. That's on Wednesday. Thursday, we have trade balance from Australia. We have consumer price index from Switzerland. And we have another interest rate decision. So we have three. We have Japan, we have US, and we have UK, Bank of England. So that's a decision right here with the minutes and the speech also 30 minutes after the announcement. So far, busy week. We have Friday, another PMI service PMI from China. We have NFPs. I think this is going to be the busiest week in a while. That's why no wonder I have 2 pages here. So NFPs, again, for new people, very, very important to understand what NFPs are. It stands for non-farm payroll. It's right here. And it's a combination of data. First of all, what's important is how many jobs were added. Then we have unemployment levels, and then we have hourly earnings and other numbers that the Feds are paying attention to in their decisions. So in this case, the numbers are coming after the decision, but it definitely would be affecting the policies going forward. So that's, and we also have employment data from Canada and service PMI from US. So as you could see, busy week in the economic calendar. Okay, so now we're going to move to the platform. And as I mentioned to you, the indices had a strong sell-off week. We'll start with, just remove this thing that wouldn't bother us. Okay. So this is the monthly chart on Dow Jones. That's what I mentioned. It looks like we're trading now on the level of February of this year. So it does look like we are in a negative situation for the year. Just trying to figure out. This is December. So December, the low of December was 32,685. Yeah, we're definitely below the December numbers. Well, we're still a little bit higher than the low of the year. We had a dive in March to 31,641. We're about 800 points above that. So we give away the profits, definitely. And let's see what's next. So this is Dow Jones. Just so you daily chart was a sell-off. So when I mentioned the flash sell-off, this could be it actually, but we just had another one that happened in September, a little bit of recovery, and we are pretty much in the vertical fall. So that's Dow Jones. S&Ps, similar situation, but on S&Ps, we're still in profit for the year. Just to give you an idea, that January low, this is January low was 38.14. We about 300 points in the profit still. Nasdaq, I think it holds the profits the most. January low was 10,750. We're at 14,268 closing. So out of 3 major US indices, you have Nasdaq is holding the strongest. Now let's just run through Europeans. European indices are selling as well, as you could see here. So on the DAX, this area here could be testing for support. As you could see back in March, we were around these levels. So that's for DAX. Also in the FTSE or UK index, we're also approaching the level of the previous multiple support. Let's see if that works. And let's take a quick look at China. China is actually bouncing here. China has been selling when the other markets were going higher. So we actually tried to bounce, and maybe we managed to hold these levels. It looks like we are holding this uh, sell-off before the extended move to the upside from the end of November of last year. The low there was 11,797. So this past week, we broke through that level, and now we're trading above again. So it could be that we're back into a support level. We'll be watching that. Okay, so that's as far as indices. Now let's take a look also at Nikkei, as we'll talk about Japanese yen in the moment. So Nikkei is holding about 200 moving average, is still in a better situation than other indices. And we are holding so far. The current level is the level of multiple supports, as you could see here. We had the support here back in May of this year, then another support or confirmation of it back in beginning of October, and we're testing it again now, and we are above the 50 moving average. So as you could see, the indices are selling. China is kind of a building support, and Nikkei possibly building support. Now, what's holding Nikkei besides all the fundamental is the cheap yen. So again, it could be my wishful thinking or just the expectations. But if this week Bank of Japan finally takes actions, which the governor confirmed that they're really concerned with the level of the yen, the current levels are a little bit alarming. Also, the inflation a little bit alarming. So we might see that maybe this week or maybe soon or maybe not scheduled, but there will be an action of Bank of Japan to increase the interest rate. So that would put a further pressure downside to the Nikkei here. Okay, let's take a look at stocks. As we said, we'll start with automakers really quick. And GM has been really diving here, as you could see. It's been super weak. We did break the previous support. This is the weekly chart. This is from July of last year. And if you take a look at the monthly chart, we are in the free fall here after consolidation here. So it could be anything. And a lot of it will depend on the settlement or stopping that strike of the automakers union. So again, out of three, GM is the one that the strike will continue into the upcoming week. So we might see a further sell-off over here. Now, if we already talk about automakers, let's take a look at Tesla. Tesla actually give some positive reasons to the shareholders by increasing the price for some models. They announced that they're increasing by $500 the price for a Model Y, which now will be costing $48,990. We talk about the U.S. market, and also for the luxury model, Model X Plate Edition, they increased it by 5,000 to the 94,990. So the stock probably initially tried to move up, but the selling market is really pushing a lot of pressure on it. So let's see how Tesla deals with that. We closed at 206. Again, if we're falling, the 200 will be a simple psychological level. And let's see if that will hold. The banks also super weak. If you take a look, they've also been selling a lot. This is Bank of America. Goldman Sachs is not the Goldman Sachs that we all remember. The champion is not the champion anymore. We're just tanking here. And let's see if this current level might hold. Well, it looks like there's a pending selling there. So let's see how that plays out. I just want to find the message that I put a reminder for myself about. Okay, so here I just found it when I was doing the research. JP Morgan Chase said earlier that I'm just quoting the article from MarketWatch said earlier that the CEO Jamie Dimon and his family plan to sell about 150 million worth of the bank stock, and they're quoting it for financial diversification and tax planning purposes. All right, that's a nice cover-up reason. Uh, I don't want to comment on that. Um, so JP Morgan's been the strongest out of all group, and it's selling. And if you have CEO, of whatever reason he mentions selling 140 million worth of stock, that is actually a million shares at the current price. That's a lot. So that didn't help as well, and things are getting more intense here. So bank sector is weak as well. So we have other makers who have bank. Another sector is weak, which normally on the selling market it would kind of be stable, but because of certain things, we have major pharmaceutical companies are actually selling as well. And I just want to take a look at them really quick. Johnson and Johnson is, after actually pretty good earnings, the stock is falling, and I think it's at the 52-week low. So that continues, and also Pfizer continues to be weak as well. And I was trying to find the reason, and I found that FDA approved one of the new medicine of Eli Lilly. That's the stock, the ticker is LLY, and they were approved for some important medicine. There's something to do with inflammatory bowel disease. And the analyst said that this approval will help them to gain a lot of market share that companies like Pfizer and Johnson & Johnson are really having a huge market share there. So by gaining this approval, they kind of take away business from those guys. So maybe because of that, it's very tricky with pharmaceuticals. It's all about FDA approval and new things coming in and kind of fighting for the market share. So Pfizer and Johnson & Johnson are selling. I don't know if that's just that news, but this is the news that I found. It's pretty big. So as we said, we have banks are selling, other makers are selling, and you have pharmaceuticals are selling, which is normally when the regular equities or the regular market is selling, pharmaceuticals are usually stabilizing or at least showing some kind of strength. In this case, they're falling. So pretty much all market is falling. If you go across the board, I'm not going to go into individual stocks, but all the major stocks are falling. The only one that looks very strong is Intel. Take a look. They did have good earnings, and if you remember, we mentioned last week, it's all about the artificial intelligence. So it looks like the area of the business to do with artificial intelligence is growing more than predicted. So on the falling market, Intel actually had a nice jump to the upside. So we definitely will be watching that when the market turns around, something they call relative strength. The stocks that didn't sell on the fall might be the first one to run higher. So something to pay attention. Okay. So that's as far as individual stocks. We have a bunch of stocks reporting this week, and that's about 150 stocks out of S&P 500. That's a big number. So one of the things you can check, I'm not going to bore you with all the list because we'll spend a lot of time, but I definitely want to mention to you that the Apple is reporting on Thursday. So after all the big guys reported pretty much, that includes Amazon, Microsoft, Intel, we have Apple reporting on Thursday. So we definitely will be watching that. The stock is selling together with all the markets. We are below the 200 moving average here, as you could see. We are below the previous support, and we're sitting right here on this level. So let's see how that earning does. Just to remind again, so I won't forget at the end, Apple is a big stock. It's the first $3 trillion dollar company. So we have major things. We have interest rate decisions from Japan, UK, and US. We have NFP numbers and Apple earnings. So all that together, it's an important package to handle this upcoming week. Okay, so let's move to commodities really quick. We start with gold. As I mentioned, gold went up towards Friday afternoon. There was an announcement that the operation of Israeli troop is widens within Gaza, and immediately towards the end of the session, gold reacted to the upside and market sold. So we are above that initial resistance that we had for a long time, 1983. We closed almost at the highs of the day. We closed at 2006. The high was 2009. So if things continue to be warming up, we might see gold challenging higher levels, maybe even challenging the all-time high. So that continues. Oil reacted as well since the latest sell-off on that same news. Oil reacted the last few hours of the day, as you could see here. We're trading around $85. Natural gas is challenging that previous high that we hit on October 9th, around 346, 347. We hit 363 on 364 on Friday, and then we sold. So we are playing with this previous high. It's either we create a new resistance on that level and slide lower, or we bounce up again and create a support and continue higher. Let's see what happens, which scenario will play out. Okay. All right, now we are to our favorite Forex, and we start with dollar index, which is remaining to be strong. We are about 106, above 106. We closed at 106.38. Upside pressure stays. There's consolidation after the pretty much huge move to the upside, and we are holding that level. As you could see here, we had the resistance. We had a lot of actions around 105.86, 105.90. We are trading higher. So as you would guess, major indices are also sitting around the same level. So it's kind of a mirror image here. So here we are testing support on the pound, on euro, and here comes the yen. Okay, now this is a trigger. Take a look. One day we raised almost 3 days of advance to the upside, and this was the previous double top here. So we had a breakout. Want to give hope to the buyers or the sellers of the yen, buyers of a dollar yen, and then Friday we sold. And the first thing comes to mind how the other pairs are doing. So this is your euro yen, pound yen, Canadian yen. All of them are selling, some stronger than others against the yen. So again, we are in anticipation of that interest rate decision from Bank of Japan. Maybe this is it, or maybe not. Maybe just another hopeful thinking on our side, and yen will continue to remain weak. I guess we'll find out when decision comes this week. So that's on the yen side. Now, worth watching the CHF JPY. As I mentioned to some of my colleagues, this pair was the highest against the yen, and it reacted the strongest on Friday. Take a look at the range, 167.32, 165.54, about 180, 170, 180 pips move in one day, and we are below the previous resistance after trading higher. So let's see if this move continues. Just to remind us, this is the level that I spoke about a few months ago, 159.88. This is the level that was reached at 1979. It took us a lot of years to come back to this level right here. We retested, went higher, retested again on beginning of October. And if yen manages to get some good news, we might actually come and retest this level again. I'm just going to zoom out just to show you how extended this move was from 2019, from around 105, 106, went all the way to the high of this month, 168.41. And take a look, a high range candle here in the current month. So definitely worth watching. And if this move continues, we'll definitely retest this. And if we break lower, it might get intense to the downside. So these are the pairs with the Japanese yen. And if we're already talking about the Swiss franc, take a look. Other currencies are starting to gain a little bit against the Swiss franc, as we discussed in the past weeks. Because of the war, especially, the gold and the Swiss franc were building up strongly, right? So that's on the currency world. And let's take a quick look at Bitcoin. If you're following that, you knew that we broke through 30,000. We're currently trading at 34,000. We hit 35 and a half, I think, back on 23rd, and it's all about that excitement on ETFs. If you remember this thing, we mentioned that this move came on the idea or the news that ETFs based on the real Bitcoin are coming in. And then after no supporting material, it came right back. But I mentioned, I don't know if I did it on this webinar, but I mentioned a few times the saying that the traders like to use: you buy the rumors, you sell the news. And I mentioned that if this thing is real, it's going to repeat itself. And take a look, the moment we broke through it, there was another impulse to the upside. So I did some research, and some major companies like BlackRock and Cathie Wood's fund and other things, they are applying for the approval of issuing the ETFs, the Bitcoin or the cryptocurrency-based ETFs. And it looks like things are building up, and we might see those things, those assets are coming out available for trading, right? Also, you could see right here, something that I mentioned sometimes, we have the 50 moving average just broke through above the 100, and it's approaching 200 moving average. So it's catching up with this recent move, and that might also trigger a technical reason for buying. And of course, a lot of people are really anxious to see this thing fly, especially people that are holding it from higher prices, from 45,000, from 60 plus thousand. So let's see if that happens, or maybe those buyers are going to get disappointed again. I guess we'll find out. The time will show. Okay, so that's it pretty much with the reviews. Just to remind us a few things. First of all, I just want to remind everyone, subscribe to the channel's YouTube channel. If you are watching on YouTube channel, I would appreciate your feedback, your reaction to it. Please put the likes if you do like it, subscribe, hit the bell. And just to put things in a few sentences, this is a busy week. We have the war continues, unfortunately. A lot of chaos, a lot of things all over the world happening because of that. Market is reacting to it. The equities are selling, the safe havens are running, the gold is running especially. We have super important events. We have NFPs on Friday. We have decision on the interest rate from US. We have decision on interest rate from Japan, from UK as well. We have earnings. 150 companies out of plus 500 are reporting this week. Apple is reporting on Thursday. So very important week. Let's see if this current, what they call red October, if it continues to be red, that means selling, or maybe there will be some encouraging news and we'll turn around and have a little bit of recovery. And Bank of Japan, as I mentioned, out of all the decisions, it's very important if there's going to be a surprise move to increase the interest rate, the yen might have a strong move against other currencies. I want to wish everyone a peaceful weekend and definitely peaceful and positive week. Stay safe, stay happy, stay profitable. All the best.